We are alive, ladies and gentlemen. Thank you for joining us today. We've actually rebounded very, very quickly. And not just in Bitcoin, in some of the other assets as well. So yesterday we had looked at some of the significant supply coming in, but also talked about the long-term story, knowing that we were in multiple hundreds of days of accumulation, getting to this moment, and that the bias is still bullish. Even if there are going to be retracements of 20 to 30% along the way, that ultimately we should stay bullish until the long-term bias changes. So what I wanted to do was start off here by looking at this really small trading range with Bitcoin. Yesterday, we had looked at the 5-minute, and we had talked about, this is what I talked, we went over scale invariance and kind of the fractal nature of both the markets and the universe. And this trading range here was effectively a distributional range, but it was only on the 5-minute. So if you have a range that's distributional and it's only on the 5-minute, you can't expect that that distribution is going to last for much more than a few days. So the important part then came to this. As we zoom out here to the 45-minute, there's a larger trading range that we've been in for the last, 45 days, something like this. Let's actually check the timing here just for fun. 30 days. We broke above the box, came back all the way inside of the box, tested the bottom of the range, and then moved up dramatically. Now, oddly enough, these can be counted as springs. In these smaller time frames, we've seen this before, where an SOS goes outside of the box and comes all the way back down to the middle of the box. As a matter of fact, let's take a look at Fetch as one of our examples. Feel confident I still have that trading range drawn up. So I'll just reset it to the chart here so we can auto fit data to screen. Okay. Yeah, there it is, all the way down here. So this moment here, all the way back in November, which feels like forever ago, we had an SOS that came all the way back to the middle of the box effectively. And a secondary test that also came to the bottom of the trading range. So we've seen this before where within the trading range, you'll shoot outside of the box, come back and test the very bottom of the range as secondary tests and have effectively a spring or a test outside of the back of the box. So you generally want to wait for larger confirmations. Now the larger confirmation to begin with here is, let's go to our secondary Bitcoin chart, which has been charting this long-term accumulation. This long-term accumulation that we've been sitting in here, and the subsequent breakout. So it was 200 and something days, 282 days within the box, another 180 days outside of the back for the SOS and final LPS breakouts before we started this move up. Generally, this SOS phase, at this point, what you're doing is creating an LPS stage. So I suspect that because of what we're seeing right now on the smaller time frame, that very slight distributional range at the top of the box on the 5-minute, which doesn't last very long, can probably be ignored. I feel very, very confident now that what we're going to get is a break up to probably around $50,000. Could go a little bit higher, but right now we're touching into some very deep resistance. So if I go back out to the 2-day, you can see here there's multiple tops and bottoms from the previous price discovery range that we're effectively trying to get out of. And right now we're actually still, as well, in a pretty thick range of supply from the previous downward cycle. So what does this mean? First off, the trend is still bullish. Anything that happens on the 5-minute, I just wanted to make sure this is clear to anyone in case it sounded confusing yesterday, like this smaller distributional range does not change our 2-day, multiple hundred day reaccumulation sentiment. This 5-minute distribution range, which took place here, sorry, it's not very obvious, I apologize. This 5-minute distribution range, which took place here before we broke down, didn't last more than, even from the breakdown, almost a full recovery was only at 1 day and 9 hours. So with just a little over 24 and into the 36-hour mark, we have recovered almost all of the price that have broke down. The second thing that I wanted to point out here, I can actually point out in a few different assets. Waiting for some type of confirmation yesterday was important. But here's where it was. The confirmation actually came this morning when we broke outside of the box and started to create a backup range. This right now on the 5 minute again is effectively a reaccumulation range with an SOS and its LPS and backup phase taking place right now. To me, this insinuates the next thing that's going to happen is a big move up into the $50,000 range. And that yesterday was effectively a liquidity sweep to draw in some of the narrative for the ETF news. It was also just a great test of this range itself. If we look back here, we went right to the bottom of the box before shooting back up very, very quickly. So on the smaller time frame, again, here on the 5 minute, we see a reaccumulation range. This is important for a few reasons. Number one, remember that it's only the 5 minutes. So this reaccumulation range will probably, let's say, last a day. And then the market sentiment will shift again. And one of two things is going to happen. I think it'll be probably similar to Fetch. You're going to see a break up to 49K, some type of small distributional range, and a really big hard slam back down to 45, 43K. If we go back to Fetch and look what happened here, it wasn't just the first SOS that went to the back of the box. It was the second one as well that came all the way back to the top of the range. When you have a significant amount of supply within the market that's being pushed around, it's good to assume that that market area is going to be tested again. So that's my current thought process. We're going to shoot up to the $50,000-ish, $49,000 range. Everyone's going to get super bullish. They're going to open a bunch of longs again. And then they're basically going to liquidity sweep all the way back down to the $45,000 range, retesting what was just the previous distributional factor for us as well. But again, when we go out to the daily and we look at the top range here, this one, yes. This widening Livermore pattern, I believe, is still going to keep us basically this is still in play. But effectively what you're going to see is that big sweep up to that $50,000 range and maybe even a sweep as low as $41,000. And then we're going to see a new trading range form. So there's going to be a lot of volatility for many things within the next 2 to 3 months. But after that, somewhere probably around May, this is just going to go ballistic. And Bitcoin's price may never come back down this low. Now, I've heard that said so many times, and almost every time that's been pretty close to the case. A Bitcoin at $1,000, it never came back down that low. It came close, $3,000, but that's still 300% higher. And I've seen that before. You know, when we're at the $17,000 top, you come back down to $3,500. Oh, you know, at 10 grand, it'll never be this low again. And then it goes to $3,500. But after that, it did never come back again. So there are moments in time when that sentiment is true. I believe the governments are going to just start printing a whack load of money. And then that's going to drive up the whole system. So let's take a look at the continuation of Fetch here just for fun, because we actually are seeing this in more than one asset. So this is also helpful to do. It gives you some kind of idealized understanding of what's going on. Here we came all the way back down to test the top of the previous reaccumulation range and very quickly moved up. So from the bottom of the wick to where we are now, that's a 25%, 26% increase. The other thing that's really important here too is to notice the supply and demand signatures. The amount of supply that it took to get us down this low versus the amount of supply that it took to recover all of that loss. This shows the favor of the bull market. So just for fun, I'm going to take a look at it with Avalanche too. Avalanche here on the 5 minute is doing the same thing. First off, reaccumulation range. Now, even more noticeable, kind of, I guess, ironically, at the very small time frames of 1 minute, you have a reaccumulation range take place right here, a small SOS, backup, SOS, a breakout, and then now what I believe is effectively it's more noticeable on the 5 minute here, but I believe this is the backup of this reaccumulation range. So all signs are pointing to bullish right now. Sometimes it's better to wait for confirmations. Like yesterday here, I was not very confident about what it was going to do. It could have easily gone lower just based off the amount of supply that came into the market. And as we had looked at with Avalanche previously, there was a distributional range up here, even on the 2 hour, that brought us all the way down here. But note, we tested the very bottom of the box. We had a supply signature similar to the PSY, and you could maybe consider this a spring or at the very least a strong shakeout. So either case, things are actually starting to look good for Avalanche here again as well. But remember, only on the 5 minute. So this is a 5 minute reaccumulation range with a breakout, an SOS, and a backup pattern that's starting to take place. So how long can we rely on this for? Maybe 24 hours, maybe longer. We'll have to wait for bigger confirmations. And this is one of the most difficult aspects about explaining the scale invariant function of how these trading range works. Because we know that, again, for Avalanche, when we go out to the 2 day here, you have 400 to 500 days of accumulation going into a falling wedge before the breakout starts, and we're technically only 69 days into this market cycle after 527 days of accumulation. So the market maker very rarely finishes his markets or their market cycle markup within a short period of time when you know you've got so much time put into the accumulation process. So on the large time frames, we're bullish. On the small time frames, we're using the scale invariant function to try to figure out what's going on these macro or these micro scales and then how that relates to our macro scale. On the 2 hour for Avalanche here, again, we're right at the bottom of the trading range. Or below the VPVR. We're, as you can see in the really tiny area here drawn up previously, we were just looking at, there was an SOS and a backup phase taking place right now. So I think it's highly suspect we go up to try to test this $45 range, probably get rejected again, do 1 or 2 more tests around the bottom, and then go back near to the top around the $45 to $55 area. Now, could it break out again? It really depends. You know, we could be looking at what becomes another distributional cycle later. It's really hard to tell. That's why kind of zooming in and out of the market, recognizing where we are in the larger macro picture, which is bullish, and the smaller time frames can help you adjust if you're playing with leverage, although I suggest you don't. If you're new at this, it's just easier to buy spot and be patient. Take a look at Solana as well. Solana looks great in its trading range here. As a matter of fact, like this looks perfectly in line with a shakeout, what could be a spring, just a significant amount of volume, how quickly it was bought up. And again, let's go to the smaller time frames here. Look what's happening identically with Solana as well. We had a trading range take place. We had our first SOS, our backup. We've not been able to close below the trading range itself, and then the likely continuation of that range. So I just wanted to go over this because I thought it was important to repeat the process. I know that over time, it can be difficult to make proper assessments off how this is valuable for you in your intraday trading ranges when a 5 minute reaccumulation is part of a 2 hour distribution, but part of a multi-100-day accumulation range. It can feel very, very deceiving. So the important part here is to just make sure you're studying, finding a calm and balance within your life, because that's probably one of the most important parts of knowing how and when to take advantage of these particular movements in the market. And then to be patient for when you have entered a position for that position to continue. I see a few of you guys asking for Chainlink. We will look at Chainlink as well because that is one of our other favorite assets. Let me just get that open here. And then we're going to call it a day. I just want to do a quick little update. I think the market's about to explode upwards again for much of the assets. So let's take a look at Link. Where do I have Link on my chart here? I know it's somewhere over here. There it is. Okay, let's go to the 6 hour, start at the larger time frame. Okay, so first thing we want to note for Link is we are in 534 days of accumulation. We had our first little accumulation range way down here and down here that we had talked about. Those have performed very well. And now a new range that's taking place. You know, at this larger time frame, this looks kind of distributional, right? Here's your up thrust, your secondary thrust that can't make it up, and then a break below the box, which could be viewed as a sign of weakness. But let's zoom into the 2 hour and see if this gives us any better insight. So an up thrust, quick test to the bottom, another up thrust, and then all the way back down. I've seen these before where a spring has taken place after an up thrust. They're very deceiving. But we're right at the middle of the VPVR here too. So we're right at some key areas of resistance. Based off the 500 days, I'm ultimately bullish. But the fact that we had a liquidity sweep that came all the way back down to almost the top of the previous range to me shows that we're going to continue upwards. Just because we sweeped out all of the liquidity and we've moved back above the VPVR. If we had turned below the VPVR, I would have maybe taken a different stance on this. But because we have other assets that have, again, moved back above the VPR and hit these, so let's take a look at the smaller time frame here for Link as well. Oh, don't want to get rid of the VPVR. Just want to get rid of the drawing. Okay, so it's not as clear here with Link. This is always a difficult function to get through. But even here, we didn't close back below the box. But we didn't have a strong exit out either. For instance, if you look at Solana, we get a strong exit out of the box. Here, it kind of reminds me of reaccumulation schematic 3. But we're still bullish. And we're above the VPVR, more importantly, this red line moving through on multiple time frames. So long-term time horizon, bullish. Short-term time horizons, also bullish at the moment. So just keep that in mind. I'll end it there. I'll leave it as a short live stream today. Thank you guys all for joining. I'll just try to do fewer questions than you guys have. I just want to do a quick update there. If you guys want to join again the day after, I'll do another live stream where we can take a lot more look at your guys' interests. But I decided to leave it there. Thank you all for joining. We'll see you on the next episode.